Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Hey, Bo, welcome to the show.
Thanks, Sam. Excited to be here.
Absolutely. Absolutely. Now, today we're going to talk a little bit. Obviously, you invest in residential real estate, but regardless of the type of real estate you invest in, you figured out a way to scale your holdings. And can you kind of tell us, the down and dirty of where you started, where you are now, how you got there, and really kind of how you scaled your business?
Yeah, thanks, Sam. So I started investing locally in my market via house hacking. So I didn't know that you can buy rental properties out of state. So in the beginning, I started by house hacking in the Los Angeles area. And then I started looking on Bigger Pockets, networking with other investors at the local RIA meetings. And they told me, hey, Bo, you can invest 2,000 miles away if you have the right systems and the processes and the people. So that got me really intrigued and put me in this rabbit hole of researching out-of-state investing.
Right.
And I found the turnkey method of investing, and I decided to go with turnkey in the beginning because I didn't know how to swing a hammer, and I thought I needed to have my own contractor and understand what a scope of work is and all of that. And as a newbie investor, I didn't know any of that. And just having somebody do all that process for me and just me paying 20% down was very intriguing. So I bought my first couple properties via turnkey with the savings that I had. And then after that, I shortly ran out of money, but I wanted to keep going and buying more rental properties. So I flew out to the market again after buying a couple of the turnkey properties. And by this time, I've already built a solid relationships with local property managers, as well as brokers and other key individuals. And then I asked them, it's like, hey, all stars know all stars, right? Who do you guys like to use for your rehabs if you guys do flips on the side? Who do you guys like to source your deals from? And some of them were more than happy to share with me. So that's where I made my laundry list of wholesalers as well as general contractors. And then I started interviewing all of them. I buy them lunch, I buy them dinner, nice meals. I'm like, hey, what is your goals? What are your expectations when working with an investor? So aligning those expectations was really key because they could be the best wholesaler in the world or they could be the best general contractor in the world. But if you guys don't see eye to eye on what you guys are trying to accomplish together, then it's going to be set up for failure, basically. So basically, after I created that laundry list, I started interviewing them, and I found about 2 or 3 people that I thought would make a good team for the rehab side. And in terms of wholesalers, I actually added them all to my email list, or they added me, I should say, because for me, I could be the person, the gatekeeper that will filter them out. So what I did, at least in the beginning, a lot of newbie real estate investors reach out to me and say, hey, Bo, how did you get the courage or the knowledge to buy these properties yourselves when you were just starting out? And it just takes practice. Whatever you're doing in life, it does take practice. I think Malcolm Gladwell said in his book, like 10,000 hours to become an expert. So what I did was any wholesaler deals that were sent to me, or I would have multiple MLS searches set up by my brokers, and anything that hits my inbox, I would just plop it in my calculator. And it would take me probably less than 10 minutes to do a back of the napkin math and see if I even want to pursue it any further, because I had certain metrics that I needed to hit, like 12% cash on cash, etc.
Sure.
So, once I kept doing that, if a wholesaler would send me a winner at like 15% cash on cash, I was like, hey, I'm going to make an offer right away, all cash, let's go. So these wholesalers, they gave me a chance in the beginning. If I would follow through, then I become kind of on their top list, where after that, they would start texting me. It's like, hey, Bo, this one I haven't even fully closed. I just got it under contract, but this is going to be a good one. Do you want to take a look at it? So I would get a sneak peek, so to say, into the good deals as well. So what I also learned as a key takeaway was follow through on what you say you're going to do, whether it be just taking the offer or even saying no. Like brokers and wholesalers, you don't want to leave them high and dry when they send you an offer. Like if you say, hey, I'll get back to you by tonight with my thoughts on this deal, just do that and they will respect you for it, whether you buy the deal or not.
Right. That's interesting. Now let's circle back because you touched on a key item that many of us struggle with. And you said, hey, I did several deals and then I ran out of money. So what was the thing that you did? Because obviously closing on these deals is important when you're dealing, no matter who you're dealing with, residential, commercial, regardless, you've got to be able to close. So how did you go from I'm out of money to now I can close and these guys want to send me deals?
Yep. So in the beginning, and this is before, ultimately I started raising private capital. But before I was able to do that, I was probably raising money every way I can, just being resourceful. And this comes in the form of my 401k. I borrowed 50% of my 401k balance. I borrow from my home equity line of credit. That was the big one. So living in California, if you're investing in out of state, a lot of people complain. It's like, hey, I wish I lived in the Midwest where homes are dirt cheap and I can buy, the whole block, right?
Sure.
But if you're also living in California, Seattle, New York, these expensive coastal markets, you have a huge advantage. Number one, your W-2 income is going to be much higher than the average. And number two, if you are a homeowner, you're going to have a ton of equity in your home that you can borrow from and deploy it into the Midwest, where the cost of borrowing is going to be far less than the money and the return you're going to make on these rental properties. So I almost did an arbitrage and made some good money.
Right. That's interesting. So then you got some more money in the bank and then you went out and continued to close. Tell us about your vetting process for the markets you were looking in. Like that's another thing common. Where do we start? So how did you select these markets?
Yeah, so I ultimately decided on the markets of Kansas City, Little Rock, and Indianapolis. All three of them are in the Midwest. I would honestly say, looking back, you could throw a dart anywhere in the Midwest, in the metro cities of the Midwest, and it's going to have similar characteristics. Obviously, not the same. There's going to be some, macroeconomic differences, but in the big picture, you're going to have good rent to value ratios. Most of the cities are going to be landlord favorable, unlike the coastal states where it's more tenant favorable laws. And then also the prices are going to be much cheaper. Maybe in Little Rock, the prices of a 3-1 is more like 80 to 120,000. And then in Indianapolis, it might be 10-20% higher. Near downtown. However, for the most part, they're going to have similar characteristics. So I would tell your listeners, don't spend too much time, trying to pinpoint the exact market. That there's no perfect market, so to say.
Sure.
So what I ultimately did is I found a couple people who were doing what I did, and I respected their model and their thought process, their approach to investing, and I started researching that market. So if it ain't broke, don't fix it, right? So I didn't want to recreate the wheel, and I kind of added on to their process and built my own.
Right. It's the whole idea that success leaves clues. So you went out, you met with these contractors, you said, hey, I'm going to build my own team, my own basically. So you manage your own property, you built your own team. Is that right? Like at this point, you're completely self-managing everything you have?
No. So the property management piece, I still send it to all of the same property manager that does my turnkey property. And that was intentional from day one. I told myself, hey, although I'm going to shift from turnkey to doing actual sourcing and rehabbing these deals, once they're stabilized and they have a tenant and I've refied my cash out, I don't want to be in the day-to-day of taking calls, setting up showings and all of that jazz. So I, to this day, number one rule is have a good property manager.
Right. And your property management companies were okay with that? Because I know that's a lot of the ways they make the money is obviously on the rehabs and the lease up. So, I guess you found somebody that was okay with just taking an already, fully occupied property and running it.
Oh, so let me take a step back. They're still going to be doing the lease up. Okay. So I'm going to give them a fully nicely renovated property. I would say for the most part, it's half and half. So I found a property manager who wanted to do some of the rehab, but they do their own flips and rehabs on the side. So I would, ask them, hey, do you have capacity to take on a new BRRRR? And they say yes. And then I send them their way. If they say, hey, Bo, we have no capacity, then at that point, I take it to my GC and he does the rehab.
Gotcha. Now that's interesting. So finding alternative team members that can kind of sub in when the other one isn't available is kind of one of your strategies for getting these across the finish line. Was it difficult doing construction from a distance?
I would say there's definitely growing pains. And again, it goes back to aligning those expectations. Like whenever I try somebody new, I send multiple people to verify. And it's that trust that verify. If I didn't have a good gut feeling, then I wouldn't even work with them because I do that interview process myself. But once I have a good gut feeling with them, I still send, my broker, who's a third party. I send my inspector, and I also have a lot of local investor buddies now, and they're more than happy to swing by my property. They live locally in the area. So at least 3 or 4 people who are agnostic from the process and they don't have something to gain, they go there and give me their thoughts. I either pay them or they're, with friendship, right? They're my friends. So so those are ways that I really mitigate the downside risk of managing a remote rental.
Right. So what's the process on that? Because you can't call your broker every other week and say, or even every week, because obviously a lot of these projects are very hands-on. There's a lot of moving pieces. Is there something on your calendar that says, okay, we're this far, plumbing's done, drywall's up, I'm calling them at this stage and they're going to look, or is it just kind of, on an as needed basis?
Yeah, I would say as needed if we're doing something big, like if we're redoing the electrical, like knob and tube, we're redoing the whole house and we got to put the drywall up, then I'm going to send somebody like a inspector and say, hey, take a look at it before the new wall goes up. Right. But for the most part, it's just weekly check-ins. So every Friday before they leave for the week, we're going to do either a FaceTime or the general contractor, we're going to do like a video walkthrough together if I can't do a FaceTime. And then after that, during the weekends when nobody's there, I usually have my broker or my buddies go out there. And with the broker, it's very relationship based. So in the beginning, when I wasn't doing a ton of volume with that broker, I would pay them. Like every time you go, I'll give you like $100. And that was nominal. And I was more than happy to pay. Later on, when I started giving him commissions like every month, then at that point, I'm like, hey, if you want my business, go check out this property. Right. And he was more than happy to do that. So
Sure. No, that makes all the sense in the world when it comes to keeping up. So clearly FaceTime and technology has helped you quite a bit in that regard. You can actually see what's going on. Do you use the same contractor if it's not your property management company? Do you otherwise have the same GC on the rest of these jobs? So at this point, you guys really know each other well?
Yeah. So I have 2 GCs per market. And when I was first starting out, I didn't know what I don't know, right? So I don't even know like what color walls to paint, what kind of tabletop or what cabinetry, whatever it might be. But now I have that down to a T. It's like, hey, for my rentals, this is what I want. Right. I might change it up a little bit, maybe the fixtures, but for the most part, we're all ready to go. They know what style that I want and what sells. Right. So yeah, it's a very smooth system at this point.
Right. Yeah, I know when we were doing lots and lots of rehab, that it certainly was all the way down to the exact faucet that went in every single home we did. It's just on a spreadsheet. This is what you're buying. So relieves a lot of that questions. What are we doing here? So that's really fascinating. When it comes, let's see, I might need to pause this right here. I'm curious where to go from here. All right. So we talked a little bit about your, obviously your processes with your contractors, processes. Let's talk about your acquisition criteria once you're in those cities. Like when it comes to gentrifying areas or up and coming areas, like how do you know when something being so far away, how do you know when it's a good buy or a bad buy? Like how do you nail that down?
Yeah, that's a great question. I would say 2 things. Number one, that's why you have to constantly be networking. If you decide you're not going to go the turnkey route anymore or invest passively in syndications, it's no longer passive real estate investing. You are pretty much active. if you want to do a good job.
Right.
So I still talk to the locals frequently. I fly to those markets at least once a year, and I buy everybody lunch and dinner. And I just ask them, hey, what's really popping? Who are the new flippers in the area? And I follow where the flippers go, right? And also I ask my property manager, because my particular property manager, in Indianapolis, for example, invests in certain up and coming areas. So naturally, I'm inherently aligned with them where they go to these pockets of neighborhoods. And in Indianapolis, it's very street by street. And you might hear this in certain other Midwest cities as well. I would say Kansas City and Little Rock, they're more by neighborhoods. So in certain zip codes, if you tell me, I can say, hey, I would invest in that zip code, or I might not. But in Indianapolis, you tell me a zip code and I'll say, hey, I might take blocks 1, 2, and 3, but I would avoid 4, 5, and 6. Yeah.
Gotcha. Now that's interesting. Now, when it comes to doing this full time, this is not a full time gig for you. This is still a passive investment. Can you kind of walk us through that and how you decided to keep this as a passive and not a full time business for you?
Yeah, the beauty of this is that I'll be as busy as the speed that I want to grow. So for the most part, all of my properties right now, I have 63 units across those 3 markets. And it's a mix of residential, like the 1 to 4 units. I have a lot of single families and I have a lot of duplexes, but I also have some quads, a 10 unit and a 16 unit.
Gotcha.
For the most part, I would say once they're stabilized, they're rehabbed, they're sent off to the property manager for occupancy, and then they're refinanced. That's what I call stabilized. I'll probably spend no more than 3 to 5 hours for the whole portfolio. And this includes bookkeeping, doing emails, if they email me, responding, hey, do I want to make this decision or that decision, things like that. The bulk of my time is taken in the acquisition, the deal sourcing, setting up the inspection, appraisal, financing, all of that jazz.
Sure.
And I would say probably I spend about 5 to 10 hours per property that I close on. And that's spread out through the month, in the nights and weekends. So it's really manageable. It was really crazy for me, I would say last December and January, when I bought like 12 properties at the same time. But thankfully it was the holidays. I took some PTO and I was able to fly out there and do my due diligence and all that. But for the most part, I'm buying like 1 or 2 a month or every other month. So it's been pretty manageable.
Right. And that's still, even so, that's a pretty streamlined process. 5 to 10 hours is, you can suck up 5 or 10 hours in a hurry on a single deal if you don't have the right processes in place.
Yeah.
So that's fantastic. Let's jump into the final 4 here. If you were to distill everything you know when it comes to real estate investing, and you're giving one piece of advice to an aspiring investor, what would that one piece of advice be?
As cliche as it is just start. There's so many people that reach out to me who may have heard my story on awesome podcasts like yours. And they say, hey, Bo, I want to do what you do. And they call me 6 months later and be like, hey, I still haven't been able to make a decision. I'm like, just start. Find somebody who you want to model yourself after and just follow in their footsteps and make it your own.
Right. Yeah. There's nothing like momentum to help you get things going. So yeah, just start. That's a great piece of advice. When it comes to investing in yourself, what's one thing you're doing to stay on top of your game?
I would say just continue to educate myself, listening to podcasts and reading books. Again, there is a fine line. You don't want to just drown yourself in podcasts and books and never take action. But sometimes it's really good, especially, I have a group of peers, about 7 of us that are in a Facebook Messenger chat. And we talk about real estate investing all day, every day. And there's definitely things I learned from them, and, they take away from my systems, and we trade. And I love talking to people on podcasts like guys like you. If there are people that I learn from in terms of, hey, this new type of real estate investing, I have a podcast myself. So I was interested in learning more about the legal side of things. So I just reach out to a bunch of real estate attorneys and be like, hey, you want to jump on my podcast? And I get to, interview them for an hour where their hourly rate is like $300, right? So
right.
Yeah, that's how I continue to, enhance my knowledge.
Right. No, and that's brilliant. This is certainly a hack right here. You're absolutely right. We get to spend the time picking brains of the most brilliant people in the industry, pro bono. So that's great. When it comes to making the world a better place, what's one thing that you're currently doing?
I would say just giving back. So the reason why I created my whole blog is in the beginning, when I first started, I trusted the wrong people and I lost $10,000.
Oh, wow.
And that really hurt. In the big scheme of things, it's not that much money on what I've created. And thankfully, I haven't lost money since.
Sure.
But because of that, there were some key lessons learned that I wanted to share with real estate investors, the newbies. So I created a blog and I document my journey. I'm very transparent. It's like, hey, this is what I did. This is what I don't recommend you do, and take it or leave it.
Right. That's awesome. Bo, if we want to get in touch with you, how do we go about doing that?
Yeah, feel free to shoot me an email, bo@biggercashflow.com. I have a website in the same name. And also you can find me on iTunes, Stitcher, Spotify, Bigger Cash Flow Podcast.
Bo, thanks so much for your time. Certainly appreciate it.
Thanks, Sam.